let's talk about one of the world's most interesting and, let's be honest, most volatile currencies, the Brazilian real. It's famous for its wild roller coaster rides. It shoots up, it plunges down, and it often leaves even the experts wondering what's next. So today, we're going to peel back the layers and figure out what's really going on with the BRL.
Right, so this is the $1 million or maybe the million real question. What makes it swing so dramatically? Is it all about what's happening inside Brazil, with their own economy and politics? Or are there much bigger global forces pulling the strings? Well, as we're about to see, the real answer is a fascinating and pretty complex mix of both.
And believe me, this is not a new problem. The real has a long history of these dramatic drops. Just look at this. Back in 1999, some kind of external shock sent it tumbling by a staggering 40%. And more recently, in 2020, you had the double whammy of the pandemic and serious worries about government spending, which caused a 30% dive. This pattern is key. During a crisis, the real tends to get hit hard.
Okay, so this brings us to our first major driver. And it might sound a little strange, but one of the most powerful forces yanking the real's chain isn't located in Brasilia. It's actually in Chicago. We're talking about the world's overall mood, its appetite for risk.
And this is the main character in that story, the VIX. You'll often hear it called the fear index. Think of it like this. When the VIX is low, global investors are feeling confident, they're feeling brave, and they're happy to move their money into places like Brazil to get a better return. But when the VIX spikes, that's fear taking over, and all that money flees looking for a safe harbor.
And the impact is, well, it's immediate, and it is powerful. Look at how directly this shows the cause and effect. A sudden jump in global fear, just a one standard deviation spike in the VIX, can slam the real down by 3.5% almost instantly. It's a perfect example of a global shockwave crashing right onto Brazil's shores.
So, how much does this stuff really matter in the grand scheme of things? This chart breaks it down beautifully. Over a year, global risk, that's our friend the VIX, and domestic risk, which you can think of as Brazil's own risk score, together account for about half of all the currency's movement, 50%. So a huge chunk of the real's fate is just tied to how risky the world feels, both globally and locally.
But, global shocks are only half the story. Now we have to look inward, at the domestic side of things, because what happens inside Brazil, especially with its government finances, can act like a huge amplifier. It can take a bad global situation and make it so much worse for the currency.
The key idea here is a concept called fiscal dominance. Now, it sounds a bit academic, but the idea is actually pretty simple. If a government's debt starts to look really, really big and maybe unsustainable, it basically ties the central bank's hands. The central bank can raise interest rates to the moon, but if investors are worried the government can't pay its bills, the currency is going to stay weak.
And you can literally see this play out in Brazil's recent history. That whole period from 2011 to 2018, the currency got structurally weaker as the government's finances got worse. And then that same pressure came roaring back between 2020 and 2022, kicking off another round of crazy volatility. The link between the government's checkbook and the currency's health is just undeniable. All right, so we've got the global puppet master and the domestic amplifier. Now let's pull out the crystal ball and see how these forces could combine to shape the future. We're going to walk through 3 possible scenarios for the Brazilian real based on what the market is thinking.
And I want to be super clear here. These aren't our predictions. We're not just pulling numbers out of a hat. This is what the market itself expects. These scenarios come directly from the consensus forecasts in the Brazilian Central Bank's very well-respected focus survey. And the specific data point we're using is from March 20th, 2026, which gives us a perfect snapshot of how things looked then.
First up, we have the base case. This is what the market thinks is most likely, giving it a 55% chance. In this future, the world is, well, it's okay, but not fantastic. The US Fed keeps things tight, global growth is moderate, and back in Brazil, they're making slow and steady progress on their finances, but that big pile of debt keeps creeping up.
So under this muddling through scenario, where does the currency land? Well, the market is betting on an exchange rate of around 5.50 lias to the dollar. So not a collapse, but definitely not a major comeback either. Now for the good news. This is the optimistic case, the everything goes right scenario. The market gives this a 20% shot. Here, the global picture gets way better. Monetary policy eases up, commodity prices are strong, and crucially, Brazil really gets its fiscal house in order and manages to stabilize its debt.
And in that perfect world, you'd see the real get a whole lot stronger, maybe even strengthening all the way to 4.80 to the dollar. A huge improvement.
And then there's the flip side, the adverse scenario, which the market thinks has a 25% chance of happening. Here, a big global shock hits, and that domestic amplifier we talked about goes into overdrive. Brazil misses its fiscal targets, and the debt ratio just spirals upward, past 85%.
In that kind of mess, the currency would take a nosedive. We're talking about projections hitting 6.50 reais to the dollar, and honestly, it could be even weaker than that.
This chart just sums it all up visually, doesn't it? The base case, that middle-of-the-road scenario, is the clear favorite. But look at that. There's a meaningful 1 in 4 chance of that really adverse scenario playing out. The risks are very clearly skewed to the downside.
So, after all that, after looking at the drivers and the possible futures, what's the big picture? What is the exchange rate ultimately trying to tell us about Brazil?
You know, there's a quote from the source material that just hits the nail on the head. It says, "The real isn't just a number, it's a mirror reflecting all the deep-seated challenges and contradictions inside Brazil's economy."
And these are those core tensions. Think about it. Brazil is swimming in natural resources, but that can actually make it tougher for their other industries to compete. It absolutely needs foreign money to grow, but that makes it super vulnerable to global fear. And there's this constant tug-of-war between pushing for growth and needing to keep a lid on inflation to keep the currency stable.
Which really leaves us with the ultimate question, doesn't it? We know what the market is betting on for the next few years, but the long-term story? That's still being written. Can Brazil finally tackle these deep structural issues and put its currency on a more stable path for good? The answer to that will really shape the country's entire economic future.
Hey, if you found this analysis interesting, do us a favor and follow the Macroeconomic AI channel. We're always putting out new insights on the intersection of macroeconomics, AI, and technology. And definitely stay tuned for our next publication.
And finally, the quick but very important disclaimer. Please remember, this is all for informational and educational purposes. It is not investment advice. These projections can and do change, and past performance is never, ever a guarantee of what's going to happen in the future. Thanks for watching.